Hi folks, welcome back. This is the ICT Mentorship Daily Log Entry for March 18th, 2021. We'll be looking at the 15-minute time frame for dollar, euro, and cable. Alright, so to clear up any confusion, I'm getting a lot of emails from folks that are not following along in my commentary, and if I've confused you, I apologize. It's not my intent, obviously, but to keep things very simple, okay? In numerical terms, this is what we're going to do. Daylight savings time, ICT kill zones. All right, for the London open kill zone, your chart, while set to UTC -4 at the time of this presentation, we are currently under daylight savings time in the United States. My London open kill zone, on that time frame in TradingView, I draw the kill zone that begins London open at 2 a.m. and I draw it to 6 a.m. For New York open kill zone, I draw 7 a.m. to 11 a.m. UTC -4. London close, I draw from 11 a.m. to 1 p.m. UTC -4. Now, if you draw these like this, if you toggle your time to Chicago, which will put it to -5 UTC, you'll see what my kill zones look like when we're not in daylight savings time. So everything will be easily understood that way. All right. So if you toggle UTC -5, you'll see them right now while we're in daylight savings time. So that way you can make a note of it. And then when we leave daylight savings time, then we'll obviously be using those kill zones. They are the kill zones that I use all the time. That's what's in my mind. That's what's being referred to when I'm looking at the charts. While I don't graphically draw them on there like I'm instructing you to train yourself to it, these are my specific windows of opportunity relative to these respective sessions. I don't change it. I don't tweak it. This is the way it is, okay? By doing this, it eliminates all the confusion for me, and it may not do it for you. It may actually cause you concern, but there's no reason to worry about it. Basically, before we go to daylight savings time, I'm looking at the kill zones 1 hour earlier and 1 hour later. So it kind of bridges both worlds. All right, here's the dollar index 15-minute time frame, and we have a buy side liquidity pool up here after the repricing at FOMC, so it created a sell side imbalance, buy side inefficiency. Short-term low here, built in sell side liquidity, traded down into it for London open, creating the low of the day, and they started working back up into this inefficiency. So the sell side imbalance, it was too fast, too soon on the downside. No real opportunity to offer for buying, and that's what we're seeing here, this rebalance. Now, what I'm looking for is evidence to suggest that we go above here, and or do we just close in here and then break down and start to run into this imbalance and maybe even challenge this old low? It's a little either way right now, but nonetheless, for scalping reasons, intraday, this whole bias here is what I was using for, and you saw me do that in my Telegram channel today with the short on cable. All right, so New York kill zone. Price runs up, drops back down into London close, order block, rallies, back into the order block here, and we're sitting just a little bit above here. We ran that high, but part of me believes that they're going to want to take it back above here. It just looks too nice up there. And if you look at what price was doing prior to this decline, it spent a lot of time before dropping here. And this area is just too clean. Maybe, just maybe, the central bank has sent the market lower here to get everybody wanting to be short. And now they're going to just completely overrun all this and maybe go higher. It's something I'm looking at, maybe considering. Nothing obviously in the cards to suggest that is what's going to happen, but I'm giving it the possibility within the scope of what we have here in price. All right, euro dollar. You can see we have buy side liquidity here ran into that on London. Shallow little run in here. And breaks down. Institutional order flow entry drill here. Notice it fails to get up into the breaker. See that? Breaks down. Optimal trade entry in New York with a bearish order block. Sells off. Comes back in London close. Breaks lower. Small little fair value gap in here as well. And attacked the sell side liquidity here. We do have a sell side liquidity pool resting over here. And again, just think in terms of a mirror image of what I suggested maybe panning out on the dollar, where they might take that relative equal high out. They might want to do something similar to that with the euro. So again, we'll be watching that on Friday. Now Friday obviously closes the week, so it doesn't invite a lot of speculation, at least not from my perspective, but it's something to observe and watch. I won't be personally participating tomorrow morning. I have a meeting to take care of. That'll take me all the way into 1 o'clock in the afternoon tomorrow, so I won't be able to do anything. No exercises, no recordings or anything like that. But if you want to study price, just look at it with maybe this idea in mind, unless obviously tonight we do something crazy on the upside. And finally, British pound. Buy side and balance, sell side inefficiency here. Runs up and creates a return back to the order block. Rallies. Takes out buy side liquidity. This level one here, these two here, that's a 60-minute or 1 hour bearish breaker. So if you go to your hourly chart, you'll see that here. I just extended that out in time. We have a high. It was created in London Open. Lower high in New York. Trades into the bearish order block. And here's what I was working off of for the example this morning. Price runs lower. Creates a fair value gap in here. Touches it here. Breaks down. Doesn't touch it here. Goes lower into the buy side and balance, sell side inefficiency, rallies back up into the fair value gap there, and rallies one more time into it. Notice the body's respecting that fair value gap. Okay, to me, it's fascinating to keep seeing that type of thing over the years, but the price drops lower again, attacks the sell side resting just below these relative equal lows, and closes in this fair value gap. Now here's where Friday has a big impact. Now, if this was, say it was Wednesday and not Thursday. If that was the case, then I would look for this to drop down below the sell side liquidity and maybe close in all of this. That's what I would be very confident doing on a Thursday. But because it's Friday, it could upset and go higher and back into this dealing range high and this dealing range low and go after the relative equal highs here. So that might be what they do and trade deeper into that breaker relative to the hourly chart and clear up some of this. Now it could go up there and then roll over and go lower, and that might be what takes place later in New York in the afternoon for British pound on Friday. But it's something you can study and watch and see if you get an opportunity to watch something like that unfold. It certainly looks like it wants to probe the lower end. This high being taken out here, the failure here breaks down. If we rally above this 60-minute breaker here, then it's going to run for here. So it should not overcome the 60-minute bearish breaker. So if it trades through that here, then we just simply came back down here to rebalance, partially leaving this as a breakaway gap. And then we'll make an attempt to go higher here and work on that daily fair value gap I mentioned in the midweek review for British pound. And that, my friends, is going to be it. Short and sweet. I will talk to you tomorrow evening for the daily log entry, and then Sunday for our lesson and commentary. Until then, be safe.